Elsa, first of all, impending recession, yes or no?
Where, I should ask, right? Because I think when people look at the US yield curve, maybe 50 years ago, 30 years ago, it did really send us signals for the US economy. Now it's telling us far more about what's going on in the rest of the world than in the US necessarily.
So that means yes.
So in the US, I don't think we've got signs. I mean, certainly if you look at the interest rate sensitive parts of the economy, they're not showing that the Fed's over tightened. Yes, you're seeing some slowdown in cases, but certainly not seeing signs of recession coming.
Okay, Ben, I guess instead of saying don't fight the Fed, don't fight German bond yields, what are they telling us?
Well, I guess if you've been following German bond yields over the last sort of 10 years, you see the further decline is extremely bullish, I guess, because they've gone from 2 or 3% to nothing over that time period. I guess where we sort of see it is, I think, generally a picture of some caution. But I think Europe's challenges are maybe a little bit different to those in the US, where we see a continuity of existing challenges and then being affected by some of these sort of wider global events as well.
Elsa, I want to talk about the Friday that we saw here, the correlations that are out there, not only within the litmus paper that's the foreign exchange market, but everything else. Bring up the screen right now. This is something the pros look at, folks. I'm not going to explain this because we don't do that on a Monday. We explain OVDV on a Wednesday. Elsa, there's no volatility out there. The volatility on sterling is next to nothing. I mean, there's no other way to put it. I'm going to try to rotate this around. I mean, where's the correlation right now in a no volatility space?
It's a difficult market for people to trade because, like you say, vol's very low, but it's been that way for some time, and trying to buy vol has not necessarily been a very good strategy. I think you've got to be a little bit more selective in the pairs that you choose to trade. And, Tom, I love it. I know you love it when I give you obscure crosses, and
please.
One for you this morning: long Swiss, short Japanese yen. If you want to kind of try and mitigate the risk of general risk off, Swiss yen, both safe havens, but at the same time do think there's an opportunity to be long Swiss against the Japanese yen this week.
Okay, but what did you learn on Friday? I mean, the message I got over the weekend was a lot of confusion about whether Thursday, Friday was noisy or if it was significant. Elsa, was it?
So I think there are two separate things that happened on Friday, and our rates team were really great at dissecting what that meant, and then we're looking at the foreign exchange angle. On the one hand, you had the 3-month 10-year inversion that Francine mentioned earlier, and I wouldn't get too carried away with that. On the other, you began to see interesting price action in 10s, 30s, particularly in the European market and the UK market, that Peter Schafrick on our rate side was very keen to identify. And I think if you look at the price action there, it's really sending you a signal of markets losing all hope that rates are ever going up, and that kind of Japanification, let's say, of Europe. If you take that to European perspective, it means that you can look for opportunities to selectively pick up carry, but maybe not funded with the kind of normal funding currencies you might expect.
But are we too pessimistic about growth, and are we actually misreading the inverted yield curve?
No, I don't think so, actually. I think there are quite a lot of reasons to be fairly cautious. I think when we look at the wider global economic cycle, and if you use the US as effectively a proxy for that, I think it's right that we are in the latter stages of that cycle. It's obviously impossible to time that to the month or the day, but I think if we can say that we're in the latter stages of that, I think that's right, and that will inevitably carry through into the rest of the world. And I think what we have seen at the same time is weaker economic activity in China and in Europe, which, combined with perhaps some of the signals we're getting out of the US, make for a fairly cautious picture.